Hello there, this is FairBinaryOptions.com, and we are trading nothing but a rising wedge on the US dollar Japanese yen, and this currency pair is extremely tricky since it broke out of a contracting triangle. What kind of a contracting triangle? Well, the previous contracting triangle that ended here is nothing but a triangle that acted as a fourth wave. And now we should look for a fifth wave to the upside. But the thing is that this fifth wave to the upside is our rising wedge. And this fifth wave to the upside should be completely retraced in the end. Now, because of that, we need some more clues regarding this whole move in here. I would say that the whole move is not even completed yet on the US dollar Japanese yen. We need a five-way structure in a rising wedge, something like 1, 2, 3, 4, 5, and then the move to the downside. And like any wedge, this to be one that goes with the 2 to 4 trend line and within the 1 and 3 trend lines, of course, like this. It is not mandatory for the piercing to come, this kind of a piercing of the 1 to 3 trend line by the fifth wave, but it is not also something that we should overrule or rule out. Now, this would make our first wave to be all the way this moving here. Also, this makes that the second wave should end somewhere around, you might say around here. Well, I would not say that, because the third wave usually goes in something like 61.8 when compared with the previous first wave. And if you measure this one from here to here and you look at the 61.8, well, 61.8 comes from here to here like this, and projecting it by the current top to the downside, it makes out the second wave is ending here. Now, if this is the second wave, then we definitely need the third, and the third can only be this one in order to have the extension for the first wave. So 1, 2, and 3. This makes that the whole move that started here on the right side from here can be only a fourth wave. But in order for this one to be a fourth wave, we need a fourth wave as either a simple correction, as a contracting triangle most likely, or we will have a fourth wave of let's say a flat or stuff like that. What I would like to see here on the US dollar Japanese yen is the following: market to go and retrace a bit into this area, but nevertheless it should go towards 120.50 before anything, and that would be a moment where I would like to buy call options, but I would, let's say, skip this call options plan as it is too risky. Anyways, let's do the following: call options from 120.50, and then put options by the time the 1 to 3 trend line is broken. So this will be the 1 to 3 trend line. So by the time the 1 to 3 trend line is broken with a move into 120.50 or stuff like that, we'll like to go and buy put options on the US dollar Japanese yen. Well, this is the trading plan, at least. As far as the expiration date goes, I would go with 1 week expiration date for a call options and end of month expiration date for the put options. So 1 week expiration date for the call option from 120.50 and 1 month expiration date for put options from 120.50. Nothing but a rising wedge, and we should add to the downside or more put options by the time the 2 to 4 trend line or the future 2 to 4 trend line to come is going to be broken. It remains to be seen. Thank you very much for being here. Have a great day. Bye bye.